number for the fund 4 is 1.74 billion.
Yeah.
It's our largest fund to date, but we're really excited to be here. Thank you for having me.
Great, lovely. So talk to us about, is it your existing investors who have come back with more money, and are you also spreading your out there with new investors? How exactly is it happening?
Yeah, no, I think we've been quite fortunate, Ajay. Almost 85% of our existing limited partners who've been with us since the beginning have re-upped in Fund 4. And the balance is through other, LPs who've been in touch with us over the last several years, have watched us grow and eventually felt comfortable to participate in Fund 4. So we've really diversified the base of LPs. In fact, no more than LP contributes 6% of the overall fund. So we've really focused on taking, LPs who've been with us for a long time and can scale with us going forward.
So just to let our viewers that some of the very marqueest global investors are participating in this fund. Ontario Teachers Fund, they have CDPQ, they have Canadian Pension Fund. So this is the quality of investors which have come in this time around. And of course, the India opportunity, who can, not want to participate there. I was looking at your first fund, some of the most successful exits you've had there, Mahindra Holidays, you had AU Small Finance, Spandana is one, Vedant Fashions. I want to understand, in your current funds, what kind of opportunities are you eyeing with this one, in fact, with this one? What kind of proposals are coming on
Sure. So, we focus on building businesses, right? That's really what our core focus is. Taking businesses at a stage when they're good and helping them become truly great, lasting businesses. And we do that through, our operating knowledge, our sector knowledge. We have operating partners who do that. So in 4 sectors where we spend most of our time, we scout for opportunities. Consumer and retail and consumer tech is one. Financial services is the second one. Pharma and healthcare is the third one. And tech services is the fourth one. So these are the 4 areas we continue to, look for opportunities. And I think as we look at the state of affairs today, given where India is, I think there's a lot of opportunity across all these sectors. We're currently in our pipeline looking at specific opportunities that play to various themes within each of these. Obviously, valuations are, as they've always been in India, rich, but it's our job to find the right risk reward to play. But whether it's the digitization theme and cloud theme and tech services, whether it's sort of affordability of healthcare services and healthcare, or focused lending, as we've done in financial services, or again retail in consumer, different themes that we've really played historically continue to be quite strong going forward.
So let's talk about some of the themes which you are playing, and some of the companies which you have in your portfolio also readying for IPO. Without going into details or numbers or stuff, I want to understand, say, Vishal Mega Mart.
Right.
It was a business doing well for a period of time, and then complete broke down happening over there. Now it's reviving and doing well and readying for IPO. You have a large stake there. Talk to us about the space it caters to and what are the prospects of the space.
No, absolutely. So it's a business we, obviously have been invested in for the last 6 years and have followed the journey for even longer. It essentially caters to the affordable value retail space, and specifically to lower income sort of mass India, where with the democratization of technology, with Twitter, social media, everyone has same aspirations. But not everyone can go to a Zara or an H&M to buy the same, skinny jeans, right? Vishal, in some ways, has made aspirations affordable for millions of, Indian consumers. And the assortment that Vishal has created, which, spans apparel, which has fast fashion, core fashion, general merchandise, and FMCG, right? These are the 3 categories that Vishal caters to and really provides a lot of value to lower middle income households, which is a large growing space.
The data shows that last 6 to 8 quarters have been pretty weak for the mass consumption category. Do you see that as a cyclical thing? Things may improve going forward, or it could be a bit of a challenge for companies such as Vishal?
I think, coming out of COVID, obviously we've seen a K-shaped recovery in general, right? So there's certain sort of the lower income consumers obviously had to make trade-offs in their budget versus the higher income consumers have had more surplus to spend. I think in Vishal's case, what's happened is, as it is in some cases, the value proposition to the consumer is so strong that it's actually been able to take share from other players. So from a growth standpoint, Vishal's growth has been relatively strong just by virtue of the fact that its value proposition is really strong. So while consumers have been on a tight budget, but they've actually come to Vishal more because they find value there.
They land up being a beneficiary of that play. And that's interesting.
Correct.
You understand lending very well, right? Spandana was a lender. Avas was a lender.
That's
very successful exits over there.
Correct.
Now you have two names. One is Veritas, which is also preparing for IPO, and it's an SME lending play. How are things shaping there? SME is a very high growth lending category. Every bank wants it. A lot of acquisitions have happened in the past. How's Veritas doing over the years?
Again, doing well. Obviously, when we invested, it was literally 18 days before COVID happened, right? So everything came to a standstill, you can imagine. But to the credit of the team and the resilience of the underlying customers and so on, I think the business has really come back very, very strongly. And if you notice the pattern in our lending theme, Ajay, we've invested behind, focused lenders. So we invested in vehicle finance, we invested in affordable housing finance, in Avas, in AU, in vehicle finance. Then we invested in Spandana, which is microfinance, Veritas, MSME finance, Avans, education finance. So we've taken specific segments which are typically underserved by banks, or the economics of that, doesn't really move the needle for banks.
Fair point.
And MSME, again, large opportunity, underserved, small ticket, like Veritas, average loan size is 4.5 lakhs. Right?
The very few listed companies doing MSME lending are showing 40% plus kind of growth out there. So there's clearly an unmet kind of demand there. I want to talk about Spandana for a moment.
Sure.
Just to understand how the growth has been last few quarters, if numbers are any indications good. Now they've given a vision of FY27.
Right.
What are the kind of operating metrics? Are you guys happy with it, the kind of management style and the targets now they are setting for themselves?
No, absolutely. Absolutely. I mean, look, Shalabh and team, really came in about 3 years ago and have really led and scaled the business, institutionalized it across all dimensions. And Sunish, my partner who leads this investment, really spent a lot of time, as I was telling you earlier, building a lasting institution. So we're obviously very happy with the way the business is progressing. Obviously, we understand microfinance as an industry is somewhat cyclical.
Sure.
So you always need to be very focused on managing risk and making sure that as borrowers go from one cycle to the other, you're diversified across geographies, you're not over leveraging anyone, and focusing on income generation, which eventually helps the underlying borrower versus anything which is more, to do with just consumption, right? So overall, we feel quite good about the prospects for Spandana, given the underlying growth, given how underpenetrated still the overall industry
Let's talk about
is.
healthcare,
Sure.
Nishant. Earlier, it was just the pharma space. Now we've seen even in the listed side, people have expanded the horizon to healthcare, including diagnostic and stuff like that. You've done diagnostic and healthcare very closely. You do life sciences via AMI, etc. What kind of prospects are you seeing? Which part of healthcare excites you most right now?
Sure. So I think what's happened, Ajay, post-COVID is health and wellness has become front and center for practically everyone. I think you see people now, whether it's on supplements, whether it's around just general well-being, there's a lot of focus. We find the healthcare services space, the nutraceutical space very exciting. We have a business we carved out of Sanofi, which is a nutraceutical business, which focuses on, gynac and ortho, therapeutic areas in particular. And we've now put a team around it, which is actually building a full business called Universal Nutriscience. Similarly, you mentioned diagnostics. Again, the starting point of any intervention is really first taking a stand of where you stand on different vitals, right? So diagnostics comes in very handy. Vijay is a regional champion, which we had invested behind, but now fully exited. But we're doing the same in other categories. In fertility, we have an investment in Oasis. We have an investment in ASG in eye care, which is, acquired Vasan and now striving to become one of the largest eye care franchises in dermatology. In Oliva, we have a strong investment. All this is eventually focusing on specific, movement from more unorganized sort of standalone clinics to more organized, consistent quality of service, organized chains, taking share as we go forward.
If you like this video, then like, share and subscribe to ET Now.